Hey guys, welcome back. So in today's video, we're going to do something a little bit different. We're not going to talk about buying and selling real estate, market updates, mortgage forbearance. We're going to actually talk about something that can benefit you, something that can help you raise your credit score upwards of 100 points in some cases. I'm going to give you 5 different tips in this video to help you raise your credit score. Now, keep in mind, each person's credit score is a little bit different. You know, it's a black box in how this thing is calculated. And when I'm talking credit score, understand that I'm talking about the FICO score. That is the score that is coming directly from the major 3 credit bureaus, which are TransUnion, Equifax, and Experian. And the FICO score is what mortgage companies use to qualify you for a loan. It's what car companies use to, when you're buying a car, and it's also what credit card companies use when they're, trying to figure out how much credit they can give you, so on and so forth. So we're talking about the FICO score, and the reason I bring that up is because there are a lot of companies out there where you can get your credit score, a free credit score through, Credit Karma or one of those. That's not the same credit score that the major companies are using in order to qualify you for home purchases, for car loans, for all of that good stuff. So make sure when you're looking at your credit report, you're looking at your actual FICO score. And there are places online where you can order your credit report, your actual credit report, and it's going to cost you somewhere around $30 or so to do it. But what I would recommend is having that credit report in front of you, when going over these different tips. In my experience comes from, being in the real estate business for nearly 20 years. 10 of that I was on the mortgage side, and often would have clients that had lower credit scores, and we needed to figure out ways to boost their credit scores in order to help them qualify. Now, there are a lot of companies out there, keep in mind, that tell you that they'll help you raise your score and get things off your credit report and all of that. There are companies that do that, credit repair, all of that. But what I'm telling you today is things that you can do yourself. You don't need to hire a company to do it. These are conversations that you can have with the credit companies, with the collection accounts, all of that good stuff that we're going to go over, that you can do without paying anyone. And I would recommend starting there. I wouldn't go out and pay a company to do this because, again, all of this stuff is pretty easy to implement. It's just a matter of taking the time to do it and having the information in front of you so that you know what you're looking at when having those conversations. But before we get into that, I want to take a minute and introduce myself. As I mentioned at the beginning, we're not talking about buying or selling real estate or any of that stuff, but that's what my channel is about. It's all about real estate, whether it's helping you qualify by raising your credit score or helping you buy a home, sell a home, or trending topics like forbearance. So do me a favor, if you haven't already, hit that subscribe button and stay up to date on everything real estate related. And if you like the content as you're going through it, do me a favor, hit that thumbs up. And also, if you have questions, do me a favor, leave them in the comment section below. I go back, I answer all of those questions directly. And if I don't have the answers, I try to find them and get them to you. So anyway, I appreciate you taking the time to watch, but let's dive into it. And now this first thing is probably, in my opinion, the most important thing that you can do in order to raise your credit score. And it's probably the easiest at the same time in some cases, right? So let's talk about credit cards, right? Credit cards are what most people have that are, impacting their credit score, in my opinion, outside of potential lates and collection accounts and that sort of thing. And what I mean by that is, the part of the scoring model, again, as I mentioned, it's a black box, right? We don't know what goes into all of the pieces, the algorithms that create your credit score. But what we do know is that there are 2 things. One is that when you have a credit card, and we're going to use the balance of, say, $10,000 for purposes of our conversation, when you have a credit limit on that credit card of $10,000 and you're over 50% of that balance, that is going to affect your credit score. Now, the closer you are to maxing out that $10,000, say you're at $9,500 of that $10,000 limit, and that's what reports on your credit report, that is going to impact your score a lot more than you owing $4,000 and your limit being $10,000, right? So you want to be under that 50% threshold. Now, most people would tell you just go pay down 50% of the balance or whatever the balance is to less than 50%. and your credit score will go up. Now, I realize that a lot of people don't have a lot of excess cash sitting around and able to buy, pay that credit card down. And that's why they're using credit cards to start. The other option in this case is actually calling your credit card company or going online, however you work with them, and asking them to raise your limit. Right? There's a lot of ways. I use American Express a lot, and online when I go on, there's a button you can push to raise your credit limit. It may ask you a couple of questions about income or what have you, but as long as you've made your payments on time, you've been current with them, and you haven't had recent increases in your credit, chances are they're willing to raise your limit. And once they raise that limit, say they raise it by $5,000, and that $10,000 limit now goes to $15,000. Well, once you say your balance is now $6,000 or $7,000, now you're under that 50% threshold that you need in order for your scores to reflect best on your credit report. So the first thing in raising your credit score would be to either pay your credit card below the 50% of your credit limit, and or try to get increases on your credit limit with the credit card companies. Now, do this with each credit card. And even if you're not above the 50%, maybe you call those companies and try to get increases, because the more available credit that you have that you're not using is reflected positively with the credit bureaus. They see that as somebody that has available credit and not using it, so that's a good thing for your credit score, and that's a great way to raise your credit score without paying anybody, without really having to do much other than have the conversation with the credit card companies. The second thing you can do in order to raise your credit score is find somebody, whether it's a spouse, a parent, or what have you, that actually has good credit, and try to become an authorized user on their account. Now, I often, when I was on the mortgage side, encountered people that didn't have enough credit. They didn't have enough trade lines, and so their credit was impacted by not having that available credit. So what we used to do is have them added as an authorized user on that account. Now, the person that's adding them doesn't have to give them a card, doesn't have to actually give them the credit, but what they do is, it's like having a credit card and me adding, say, a spouse or a kid or what have you to my credit. That trade line now shows up on their credit report, and all the credit history that goes with it shows up as well. And so that, in a lot of cases, helps people raise their credit score too, because now it shows more available credit, and in this case, it's not being used by that person, and assuming it has a positive history and what have you, that is also going to help raise your score. So again, the combination of all of these things is where we're talking about raising your credit score upwards of 100 points, in some cases more. But if you're just able to do one of these things, two of these things, depending on where your credit score is, that's going to boost your score and maybe potentially put you in a better place. So I'm not saying you have to do all of them, but keep in mind, see which ones are easiest for you to do, based on looking at your credit report, and that can put you in a better position. Now, the third thing we're going to talk about is one of those it's often, it's hard to figure out exactly what to do in some of these cases, and we're talking about collection accounts. Now, a lot of people have collection accounts that are super old, and in some cases you have medical collection accounts. You might have different types of collection accounts that show up. The one thing with collection accounts, if you are in a lot of people don't even know they have them. So let's start there. So by getting your credit report and actually your true FICO score, the report, you're able to see what collection accounts report on there. A lot of people, say, well, hell, I didn't even know I had a medical bill that was due. I'm willing to just go pay it and pay it off, and that should raise my credit score. Yes and no, right? What we don't want to do is call the collection companies up and just pay the account. Right? What you want to do is have that conversation with the collection company if you plan on paying it. Now, what I will say is that if you have super old collections, they're 4 or 5 years old, paying them off probably isn't going to impact your score very much. But if it's something fairly new that's been reported to your credit report, and in order to raise your score, paying that off is definitely going to benefit you. having a conversation with the collection account company before paying it is key, right? What you want to do is you want to get letters from the collection accounts saying that they're willing to remove it from your credit report. We don't want this stuff on the credit report. In a lot of cases, they will give you that letter. They'll provide a letter to you stating that they'll remove that trade line from your credit report when it's paid in full. Now, keep in mind, not every company is going to do this, and also whenever you're having these conversations, you always want documentation if you can get it, right? So you always want to ask them for proof of it, for a letter, for an email, from something from them. That way, if it's not removed, based on that conversation, you have something that you can send in to the credit bureaus to have it removed. Now, another way to address collection accounts there are template letters out there on the internet. And this is what a lot of credit repair companies will do. And I'm probably going to get a lot of hate for saying this, but you can get those template letters offline and send those into the credit bureaus to have those collection accounts removed. Now, my understanding with this is that if they don't reply to you within a certain period of time, I think it's 30 days after you send them the letter, they automatically have to remove that trade line from your credit report. So there is a way to continue sending these letters and have that trade line removed, because they miss a letter and they don't respond and what have you. But I know that's a lot of information, and I'm not going to get into all of that right here. But the idea is that if you have collection accounts and you plan on paying them off, make sure you're getting a letter to do so. And in often cases, if it's super old, if it's 5-6 years old, it's probably not impacting your credit anyway and might be something that's avoided, and you should probably focus on the other items that we're talking about here. So I went long-winded on that. I know people will probably have questions, so just leave them in the comment section below and I'll do my best to address them and provide clarity on what I was talking about there. Now, the fourth thing is going to be counterintuitive to everything you think about credit, and that is do not cancel old credit cards if you're not using them. As we mentioned in the beginning of this, available credit, even if you're not using it, is a positive thing for your credit score, for your credit scores. And what happens is a lot of people pay off a credit card and they don't want to spend it, so they go online and they cancel it and they say, I'm just going to cancel it. That way I don't have the available credit there and I won't use it. Well, by closing those accounts, it could impact your score negatively. So you don't want to close open accounts. Remember, the more available credit that you have that you're not using is a positive thing. Now, I understand that some credit cards, American Express, the Platinum card or whatever, is $500 a year or around $500 a year. Some of these other credit cards can be, $200, $300 a year. And so if they're costing you a lot of money to keep them open, then you may want to consider it. But I will tell you that the more open trade lines you have that you're not using is a positive thing. So that's why we talked about, being an authorized user and having that available credit and not using it, because it impacts your score and raises your score. So by having that available credit will raise your score. So if you don't have credit cards, you might potentially call and start getting them, right? In order to boost your score up, in order to raise your score. Now, remember, you don't want to just go out and start spending stuff on it. And if you do, you want to pay it down as quickly as you can to create that credit, that history of credit with the company. So, and the last thing we're going to talk about is paying your bills a little bit early, right? So if your bill, the way credit reports work is that when you pull your credit, a lot of times what's reported is a month old or 2 months old, depending on when it's pulled. And that's because the credit reports, when they update, say at the end of the month or whenever, it's often not reflected on the credit report for about a month. So if you're able to pay your bills a little bit early each month, so say if it's due on the 31st, you pay it on the 15th or whatever, chances are it's going to reflect more current on your credit report when it's pulled than paying it on the day that it's due, or even potentially later than that. So you want to make sure that you're paying your bills on time at best, and in most cases early, so that when your credit report is pulled. Okay guys, amateur hour over here. My camera died, the battery died mid sentence there. But what I was going at is that one of these 5 things can definitely impact your credit score and help you, raise your score. And if you're able to implement all 5 of them, then that's where we're talking about big raises in your credit score. But even the one little thing like, paying down your balance less than 50% or getting your credit limit raised so that you're under that 50% threshold, that can jump your score up a huge amount, especially if you're able to do that on multiple credit cards. But if you're able to implement any of those like that, potentially adding yourself as an authorized user, paying off collection accounts and getting them to remove those trade lines from your credit report, not closing your accounts, after you pay them off, and or paying your bills a little bit early so that that information is reflected on your credit report when it's pulled. Those are the things that are going to help you raise your credit score and put you in a better position to qualify, whether it's getting a better interest rate or, just getting a loan in general. Maybe if you're not able to because of your credit score now. So I hope that was helpful. But if you have additional questions, do me a favor, comment below, reach out to me directly. I'm happy to help. As always, I appreciate you taking the time to watch and look forward to seeing you again on the next video. Have an awesome day. Bye-bye.